The McAsphalt offtake agreement and the TAMCO strategic investment are probably the two most single important things that we have done, because it validates our product into the marketplace. And it's not validation by a local roofing company. These are multi-billion-dollar companies. Their R&D divisions are bigger than my whole company. When I get questions from investors about, do you think your technology works? I'm like, call TAMCO, call McAsphalt. Because those are the guys that are the multi-billion-dollar companies, and multi-billion-dollar companies do not make investments or do 5-year offtake agreements unless they think it works.
Welcome to the Jay Martin Show. If you're new to the show, my name is Jay. I'm an investor. I'm here looking for the smartest home for my cash. And my guest today is Aidan Mills. Now, Aidan is the CEO of a company called Northstar Clean Technologies, a company of which I'm a shareholder. Now, the reason that I like this company and wanted to bring them on the show today is because, like all of you, I am watching the renewable energy trends and renewable industry trends. But I don't believe 99.9% of the business models that I see trying to play into this sentiment, right? Most of them are waiting for things to occur that haven't occurred yet, like government policy to change that would favor their business, or consumer sentiment to change that would favor their business, whereas Aidan is building a business that works today, solving a problem that exists today with a solution utilizing technology that he's built today. And the evidence of this is that the business is cash flow generating and has recently, over the last 18 months, become the recipient of sizable non-dilutive investments from various strategic partners, allowing him to scale this business appropriately. So, exciting story, different look from most of the stuff you see on this channel, but I'm always excited to show you guys some of the companies I've invested in, and here is one. So this is Aidan Mills of Northstar Clean Technologies. Enjoy. All right, here I am with Aidan Mills, President and CEO of Northstar Clean Technologies. Aidan, it's great to have you back on the program and really good to see you, man.
Yeah, good to see you. Good to see you again.
So I'm excited to get caught up because it's been a minute since the last time we chatted about Northstar, what you're building, but it's a really interesting story, very cool business plan, and you're executing brilliantly on it. My audience has heard the first couple updates, and we've been covering this story for like 2 years at least. I mean, I was at your plant, right? In Delta, I think about 2 years ago.
Yeah.
We brought the camera crews. It was awesome. Right. Just in case anybody's tuning in for the first time, though, let's open up the curtain for them. Northstar Clean Technologies, what is it you guys are building?
So we've developed a proprietary technology that essentially takes an asphalt shingle from your roof and can split it up into its individual component parts. So a shingle tile is made up of aggregate, so sand, about 50%. It's made up of kind of fiber, kind of either fiberglass, or the older tiles are made up of paper fiber, and limestone, which is the filler, about 25%, and about 25% oil. So if you think about it visually, we have a shingle tile that comes off a roof, comes into our facility, we grind it up, we put it in the front end of the plant, and then at the back end of the plant, out comes sand and fiber and asphalt, and that's it. So we deconstruct everything to make those products, and those products can all go into resale. So you can divert, instead of that shingle going to landfill. So for example, one of our facility, the Calgary facility, 40,000 tons of shingles a year, instead of going into landfill, comes to our facility, and we produce the products that literally go back out into a complete circular economy.
Okay, awesome. Thank you. And just for clarity, it's actually a cost savings for the junk removal company to bring this product to you versus going to a transfer station or a dump. Right. They pay, right, for the privilege to dump product, obviously, in a landfill. They pay you a tipping fee, which is one of your revenue streams. It's actually less than they pay at a landfill. So it's in their best interest. Plus, they're doing the right thing, giving back to the circular economy. And that is one of your three revenue streams. The first being tipping fees, the second being your outputs, which is actually three different things. As you mentioned, you resell asphalt, fiber, and aggregate products back into the marketplace. And then there's, maybe talk about, I don't know if we'll get into the potential of the carbon credit income stream. We can go there or not. I'm less familiar with that, to be quite honest with you. That's not what attracted me to Northstar, by the way. And I just want to make this super clear. What attracted me to Northstar was the fact that there's no shortage of promises being made in the renewable industry, right? And what I love about what you're doing, Aidan, is you're attacking a circular economy business with a cash flow focused model, right? And
Right.
you're in revenue, you're generating cash, and there's no pie in the sky dream here. It's just like boots on the ground facility. I've been to it. You're processing
Yeah.
products and selling it. Yeah.
Well, and I think the important thing about that is we've kind of used how much it is to build a plant, and we kind of use broad numbers about what EBITDA is going to be generated, etc. We've never included carbon credits because it's really important to me, even though this is an unbelievably ESG focused business, this is actually a manufacturing plant. This is like literally feedstock in, products out the back end. Now, whenever we start to run the plant in Calgary and we think about to get carbon credits, you have to do obviously the protocols. You need to put the protocols in place. You need to measure it against the base case that needs to be signed off, etc. So even when we start the first facility, it's probably going to be 12 to 18 months away before that those carbon credits can come in. But we're completely convinced that we will have carbon credits. And actually, one of the other things that is becoming more important and people are talking about the benefit for is diversion away from landfill. So as I said earlier, like 40,000 tons a year of shingles diverted away from landfill to our facility. We think that there can be upside from an environmental credit perspective from that as well. Now, again, 18 months away, let's not bank on that money. Let's not bank on that in our commercial model. So in all our conversations, we have a zero carbon credit revenue when we talk about the EBITDA of the business. It's total upside.
Yeah, no, I appreciate that. I think it's very pragmatic of you to build the business model that way. And then, sure, there's additional upside potentially that you'll capture if and when. Right. It's just good news. So this year, you really validated the model in terms of it being proven as a circular economy business. This was validated with a substantial investment from TAMCO last year. Do you want to walk my audience through what exactly that involved and what it means for the future of Northstar?
Sure. So, as we think about the partners for the business, of course, as we chatted the last time, we have the offtake from Calgary. 5 years of that offtake from Calgary is being taken by McAsphalt, so part of the Colas Group. And we already had done that deal when we chatted to you last. But that was the validation that our asphalt can go into paving. So it can go in to build roads. McAsphalt had done all the R&D to make sure that could happen, and they're part of one of the biggest asphalt companies in the world. So that was like, if you think about what's really important for us as a business, validation from paving is absolutely huge. What TAMCO did was that validation for shingle manufacturing. So they did exactly the same. So they have an R&D part of their business that basically took our asphalt and said, well, can we take the asphalt and make new shingles from it? And so they did all the R&D, and then they came back and said, actually, the blending ratio is so beneficial that the constraint wasn't how much asphalt they could put into the shingle tile. It's that we would literally almost never be able to produce enough asphalt for their business. The blending was so beneficial. So they then said, okay, well, we're going to make a strategic investment. So they made a $10 million US strategic investment in the middle of last year. So 6.4 of that was preferred equity. So they did the transaction at 29 cents a share, and the remaining 3.6 is in two tranches. So whenever we bring Calgary to commissioning, they'll do a debenture for 1.8 million US. And then when we bring Calgary into operation, they'll do another 1.8 million US as well. And that was a good risk management for them, because they were like, well, we'll give you some money up front. That's great. But actually, you need to perform and you need to deliver on the stuff that you've promised that you're going to do. And then we'll give you the balance of the 10 million US. So great structure. And part of that as well, we did an MOU with them. And the MOU with them was we give them exclusivity for the first 3 plants in the US. Now, the good thing about that is we therefore have an exclusive off-taker for our first 3 plants in the US. So it's a completely mutual benefit in that one of the biggest shingle manufacturers in North America has committed that our first 3 US plants, we have offtake and supply to them. So, And then the thing that obviously that enabled to happen was kind of the triangle of the investment in Calgary. So, we had the strategic money from Tamco, we had BDC. So we'd done the loan agreement with BDC for the debt on the facility, 8.75 million. And then that added to the third leg of our stool, which was Emissions Reduction Alberta. We'd been awarded $7.1 million from them. That's infinitely non-dilutive because it's a grant. So it's like literally, and that is so $7.1 million bucks, and that all of those together completely funded Calgary, and of that complete funding of Calgary, over $60 million was non-dilutive.
Yeah, that's super, super important. I just hosted a big conference in Vancouver, British Columbia, focused on the commodity equity space. But one of the key conversations we had on stage was counterparty risk and what to do about it. And in that industry, right, it's like dilution is one of the biggest risks that investors in early stage equity face.
Absolutely.
Right. So your creative approach is just, I just want to show it's evidence that you're being a sound steward of your shareholders' capital, Aidan. It's important, right?
It is. And look, I mean, we all know how tough these markets have been. And so I think, but I think investment from strategics, especially somebody who validates from an R&D perspective our product, is huge. It's absolutely huge. That was probably so the McAsphalt offtake agreement and the Tamco strategic investment are probably the two most single important things that we have done, because it validates our product into the marketplace. And it's not validation by a local roofing company. These are multi-billion-dollar companies. Their R&D divisions are bigger than my whole company, like literally. So that validation, when they come back and say, we think this thing works, like when I get questions from investors about, do you think your technology works? I'm like, call Tamco, call McAsphalt, because those are the guys that are the multi-billion-dollar companies, and multi-billion-dollar companies do not make investments or do 5-year offtake agreements unless they think it works.
Yeah. Yeah. Okay. So I want to spend one more quick minute on Canada. You're right. News on the U.S. front, super exciting. With Tamco getting exclusive access to the first 3 plants. We'll talk about the market size, because obviously there's a big market opportunity in Canada, like $1.3 billion market opportunity, I believe, but it's 5x south of the border, obviously 6x maybe. But walk me through the timeline for Calgary. So we're fully funded, right? Yep. We're receiving product, we're receiving input now, right? So walk me through what's happening at the Calgary plant.
So fully funded in the middle of last year with the Tamco investment and BDC and ERA. So that was all good. And then we moved into detailed design, and we ordered the long lead items. So as you know, from the plant in Delta, when we walk around, we're kind of like, you saw all the big units, and some of those are longer term delivery. So it takes, 6 months to 8 months to get it delivered. So as soon as we did the detailed design, as soon as we got the funding, kind of October time, we ordered 3 of the big long lead items, which is one of the pieces of the kit at the front, one of the pieces of the kit at the back, and then the electrical system. So that all got ordered then. We should be finished detailed design actually probably in the next few weeks here, and then the final that enables the final kind of orders to go out for the rest of the equipment. I think we will be constructing in the middle of the year. And I think we will be commissioned by the end of the year, or we will be commissioning by the end of this year. So as people think about revenue, the last time when we sat in the pilot plant and we were kind of like, the plans are probably 18 months away or 2 years away. That's not the case this year. This year, our first commercial facility will literally be up and running by the end of the year. And part of that, of course, is, well, where's the feedstock coming from, right? So we have to collect enough feedstock to commission the plant and run it through the winter. And people in Calgary are not re-roofing their houses at minus 30 degrees, as you can imagine. So we're expecting to collect probably about 10,000 tons of inventory ahead of the commissioning, and that's about a quarter's worth of production, and that's probably the inventory that we would run on a site typically. So the first revenue got generated by Calgary. We've done an offtake agreement with ICO. So our facility can take two types of shingles. So it can take shingles that come off a roof when people are re-roofing their house, or it can take shingles that come from a manufacturer that are like waste shingles. So when people are when ICO are making the shingles and they change a color or they change a type of shingle, then there's always like offcuts and waste or whatever. And so that's what they send to us. So instead of it going to landfill, now it comes to us. And that's so the ICO agreement is similar to agreements we would have with other shingle manufacturers. We'll have one with Tamco, for example, that they just send us the waste from their plant. So that started. Calgary generated its first revenue check 10 days ago when the first truck from Tamco rolled onto the site.
Okay. Yeah. 10 days ago. It's February 2nd for context today. I appreciate that. And congratulations, Aidan.
Thank you.
On that huge milestone. So can you walk me through revenue projection then, like say end of 2024 when we're fully commissioned in Calgary?
Yeah, I mean, so roughly, each plant generates about $10 million from a revenue perspective, and EBITDA of about $5 million. So I think we will be at that kind of annualized run rate this time next year. That's my kind of view, that the plant will be up and operating. So the other thing that's really interesting about that revenue projection is it's relatively conservative, not because of just the carbon credit thing we chatted about earlier, but it is relatively conservative in that that's operating a plant 6 days a week, 10 hours a day. So that's not a 24/7 operation. So as we start to secure the feedstock for next year, there is the potential that there could be more than 40,000 tons available. If that's the case, then we can run the plant even more efficiently and longer and generate more revenue. So in theory, that the plant has the capacity to double its hours of operation if there were that number of shingles available, which is great. So as we think, all to say, if we think about bigger markets, so we think about, the next plant in Toronto or the first US plant. So let's say the first US plant, is in a market that we could have 80,000 tons of shingles per year. We can run 80,000 tons at the plant. We just double the number of hours that it runs.
So that 10 mil rev, 5 mil EBITDA on a per plant basis is not based on plant capacity. That's based on feedstock availability.
Absolutely.
Yeah. Good. Okay. So that takes us to end of 2024. You've been executing on your business plan since I met you a couple of years ago. 2025, right before I hit record, you said you want to exit 2025. I think you said built in Toronto and built in the first American city, correct?
Yep. So I think to do that, we will, and that's, a couple of, in my opinion, probably two of the biggest catalysts this year. One is the announcement for the Toronto facility, and the second is the announcement for the first US facility. But of course, that's all permit dependent too, right? So if we secure the sites by kind of Q2 this year, and then we start the permitting process, we're a bit beholden to how long the permitting process takes in those jurisdictions.
Yeah.
But in a perfect world, we would finish this year with Calgary operating. Q1 next year, we'll look back at the construction and the operation and say, well, should we tweak this? Should we tweak this, et cetera, to build plant number 2? And then we should be ready to start constructing in the middle of next year in both Toronto and in the US. And I think a 6-month build is realistic, but of course you have to have the permitting in place. So that's going to be the key determinant about when the kind of the plant will be in the ground. But if we work it hard and hopefully kind of the permitting works out, end of 2025 we should have the next 2 plants in construction, if not finished.
Yeah. Okay, got it. Where are we looking in the US, Aidan?
So can't really narrow it down quite yet, but as you know, one of the things that we're doing is working with Tamco as to where they would like to see the first plant. So
Yeah,
which
okay.
of their facilities we need to supply.
I guess
So,
that makes sense. You'd go to where the demand. I mean, yeah, you got the partner now, so yeah, follow
right.
their lead. Yeah, yeah.
Yeah, and that was part of the MOU. That was part of the exclusivity, was that we would work together on. And I mean, of course, what's important is, like, are there enough shingles in that area?
Yeah.
Where's the site? What's the distance between that location and their facility? How, the volume that they're going to take at their facility, etc. But yeah, so that process should be landed in the next certainly in Q1. So what I really want to be able to do is come out in Q1 and say, okay, this is where we are with the TAMCO process, and here's where we're going to go.
Okay. Got it. What would there be a expected lifespan of a plant like this, Aidan? Like, do you forecast that where you may exhaust the available feedstock in that proximity? Like, how does that factor into the plant planning?
It's infinite. This process is essentially completely infinite. So in 2022, 16.5 million tons of shingles went into landfill in North America. That's enough for 400 Northstar facilities.
All right.
That's how big this market is. And so if you think about it, like, if you think about the GTA sending over like 250,000 tons away to landfill, and that's not going to stop. I mean, 80% of all new roofs in North America or in the US are shingle. And that's going to feed my plant in 25 years' time. Like, this is completely infinite until people stop using shingles on their roofs, until they move away from that 80%. Maybe we're going to have floating musk kind of solar roofs, whatever. Yeah. But people use shingles across North America every single day, and that's a 25-year supply for me.
Okay.
I mean, there's so much going into landfill that feedstock. As long as we're if we're in a city that has more than 1 million people, essentially we have enough to build a plant. Roughly. Okay. That's good context.
I appreciate that. All right. I just want to recap a few things. Again, what initially called me to Northstar was your sort of boots on the ground, pragmatic approach to call it the circular economy or the renewable future, right? There's a lot of pie in the sky promises. You're building something very tangible, and it's real. And the evidence is in the cash that you generate, which is the ultimate truth teller. I've always appreciated the multiple streams of revenue. You charge for both inputs and you charge for outputs, right? It's novel and advantageous. And then just quite frankly, since I've met you, you've always, whenever you come back on the show, we're talking about how you did what you said you were going to do, right? Which is honestly refreshing, as you know, in the startup business, to find out with consistency. So I appreciate that about you as a leader in the business. And obviously I'm a shareholder, so I'm happy with all those things. All right, Aidan, anything you want to leave my audience with today before we wrap it up?
No, look, I think, I mean, as we've chatted about, you often talk to people in this renewable space that have a vision, and those visions are often great, but they're going to deliver in 2 years' time or 3 years' time or 4 years' time or whatever. We literally have the first commercial facility delivering this year. The first full cash flow delivering this year. The move into the biggest market in the world, in North America and in the US this year. Like, all of that means that, where we're positioned today is like, we're literally at the hockey stick of this whole business taking off, from first commercial facility and the move into the biggest market that is, and nobody else can do this. Like, literally, I mean, lots of people are looking at it, but we are the only people that can solve this problem today.
Yeah, well, you wouldn't let me bring the cameras right into the plant when when I visited you in Delta. We had to stay outside, away from the secret sauce with the cameras. Well, I mean, what you just said, right? Like, that's the issue with most renewable businesses, is they're great businesses as long as some things occur that haven't occurred yet, whether it's like infrastructure that needs to be built that doesn't exist yet, maybe just demand that probably will occur in the future but doesn't exist yet, government policy that might occur in the future but doesn't exist yet. Those things have to occur for a lot of renewable businesses to make sense. Yours makes sense now. It's cash flowing now, right, off of what exists today, existing demand, existing supply, which is what I appreciate about it. All right. Aidan, it's always fun catching up with you. I appreciate what you're doing. And
well, thank you. Good as always to chat. Good, it was good having you out at the plant. So you kind of got to see the nuts and bolts of it. And now we're just going to roll those all across North America and take over the world shingle by shingle.
Hell yeah, I love that. All right. Thanks, Aidan. We'll do it again 6 months or so down the road and get caught up again. But I appreciate your time today. Thank you.
Good. All right, Jay. Thanks, man.